The podcast is powered by D2K Technologies, a trusted name in BFSI analytics and digital finance solutions. Based in Mumbai, the company has offered data analytics solutions for 20 years. So, hey everyone, welcome to yet another podcast session with the Data Talk. And this is a dedicated podcast has been created for the very specific sector named Fintech. We'll talk about the financial technology and what kind of innovation that is going around in this particular sector, plus what we can see the future would look like in the upcoming 5 or 10 years. So regarding that, we are going to discuss in this podcast. So for this, I have invited one special guest with which we are going to commence this session. And he has a very great kind of control or understanding in the Web3 section where fintech is taking its place or growing with the very best route we can say. And I think so regarding that, we'll try to gain some perspective and what is the thought behind him starting his own venture, Nord Finance. So without wasting any time, I would like to welcome Amarnath Reddy. Hey Amarnath, hi, welcome.
Hi, how are you?
Yeah, I'm great. How are you?
Yeah, I'm good, thank you.
Absolutely. So, what are the things right now going on with you?
Yeah, so before doing that, I'll let me introduce about myself a little bit more.
Sure, please.
So myself, Amarnath, I'm co-founder and CEO of Nord Finance, which is a decentralized finance application which we have been building since last 2 years. So before this, I was also co-founder of Ameston Asset, which is a crypto hedge company. So we started this in 2018 September. So I was part of this hedge company focusing on crypto and blockchain related companies. I was part of operational and research for almost 2 years, and then we started Not Finance, and here we are now. Yeah, thank you for calling me for this podcast.
Right, right. So before Nord Finance, you are into, I think, the company you have named. Uh,
Yeah, Mr. Nasit.
okay, okay, yeah, right. So, like, is it completely into fintech or the things that you are doing right now in Nord Finance means almost similar or it's completely different portion
Yeah,
of blockchain?
yeah, it is completely focusing on Web3 startups, not only fintech,
Okay,
but also NFTs, metaverse, and everything else which is related to Web3, including blockchains.
right. And what sort of interest you to create this ecosystem of Nord Finance? If you'd like to give an idea, that means what is the kick I would say that will give you a click that yeah we should do that and you have taken the step.
Yeah, so even while I was working as a full-time electrical engineer in Middle East almost for 12 years, I was always having inclination towards personal finance or understanding about fintech industry regularly. Then I kind of came to know about a blockchain, Bitcoin, and Ethereum in year 2017. That got me a lot of interest into the field, which has a lot of potential and innovation surrounding the technology point of view. So
Right.
being more interested towards personal finance, also being able to understand new technologies related to Web3 and all. Then we started this Amiston Asset, which is actually focusing mainly towards Web3 startups, and it is also a crypto hedge company, basically meaning we kind of take high net worth individuals assets into our custody, and then we kind of invest them into different investment strategies and try to make their portfolio grow. So all my previous experience and interest and exposure towards personal finance made me to kind of think about entering into decentralized finance space. I was very good at operations and research and experience. Then I found my co-founder Jignesh, who is very much into technology. So he is part of Tezos India ecosystem. He's part of Hyperledger. So he's been building this fintech applications on blockchains like Hyperledger or Tezos or Ethereum for almost 3 years. So we've been known each other for quite some time. And then we thought of doing something better in terms of decentralized finance due to our expertise, experience, and exposure towards this field. So then, yeah, here we are. Like, we are actually very much happy to say that we are in this position right now, and we still long way to go, at least for many years. But we at least started to do this very early stage. So we are very thankful being into this field.
Right, and even it makes us sense. It makes sense, because what I see within India, we as a part of fintech industry, out of the whole Indian population, you can see that 1% of people understand or have a kind of interest toward the financial ecosystem, and very small portion of that have some grasp or idea around Web3 context or what is happening in NFT and DeFi.
Right.
So yeah, I think so. You have been gone to a bit level more than that and created something outstanding with I think a collaboration with one of your friend that Jignesh, right? So
Yeah.
a lot of respect for that, and we are also happy to see you grow as a big leader within this particular field, right?
Thank you. Thank you very
Uh,
much.
so this is, I think, the initial brief we get to know. I would also like to get your perspective uh, on the on your education as well. Like you have completed your master's, I think, very recently from UCLA, right?
Yeah.
Uh,
So yeah, I graduated my electrical engineering from NIT Warangal, which is one of the premier
right.
institute in India. So then I was working full time in Middle East, and then recently I enrolled into this PGP General Management program from University of California, Los Angeles, so UCLA, 100%
Right.
management school. So one of the reputed management schools. So yeah, I'm happy to say that uh, I completed this PGP course, which actually helped me to kind of manage my day-to-day business and also give a lot of exposure towards general management and how to do financial things related to the companies.
Makes sense, right? So yeah, why I mentioned it is just to get an insight. Okay, that like after I think getting into the UCLA, okay, further after completing it, or in the meanwhile you have started the I think Nord Finance, right?
Yeah, it is in similar times actually. Yeah.
Right. So I just want to understand that does it have any relation that the community that UCLA have or the environment that it has, okay, have given you that kind of understanding, or means it's also out of that specialized ecosystem you have to go through.
No, it is general management program, nothing to do with Web3. My
Okay.
interest and my previous experience mainly surrounding around corporate culture and not having any leadership role. Being a leadership role when you are starting your own startup, you need to understand many things with respect to the management, financials, and HR related things. So which I never had any experience in my previous career. So I thought it is better for me to kind of enroll this kind of programs so that it gives a lot of exposure for me to run my own organization, which kind of makes sense for me, but it is kind of a general management program which has no exposure towards Web3, I can say.
Okay, okay. I'll got an understanding. So you, according to you, it's more focused on building your team, managing your team, and
Yeah,
growing as a leader. That is where I think you say UCLA will help you with, right? And
right.
further, this is what you with your I think around 20 years of experience. somewhere around that have given you the thought and capability that you feel we should start something like Node Finance, right?
Yeah.
Makes sense. Further, I'll just go ahead with the flow. Okay. And so you are based in your team is based in Hyderabad, right?
Yes.
Okay. So if I visit Hyderabad, apart from enjoying Hyderabad biryani, what I should see? You mind
Hy- hy-
giving a little idea if I will travel further, right?
Right, right. So Hyderabad is very famous for its own biryani, but at the same time, it is also becoming a tech hub, especially with a lot of growth in IT sector and also pharma sectors. A lot of global companies are actually have their base out of Hyderabad. If you see the western part of Hyderabad, it is developed a lot. Like you can actually feel that
Right.
respect to roads, with respect to infrastructure. So I'm also staying in a western part of Hyderabad, which actually I feel like very pleasant with respect to staying in this kind of environment. Being stayed in overseas almost for 15 years in Doha, the
Makes
kind of
sense.
infrastructure we expect in India, I can't compare, but at least it is like growing in par with some of the Western countries, at least in western side of Hyderabad. Yeah, so that's it.
Absolutely makes sense. Even I think, if I'm not wrong, the Amazon biggest working force has been set up right now in Hyderabad itself, right?
And,
And no
uh,
doubt it's a
yeah, Google, Apple, everybody is there. Microsoft.
absolutely. So yeah, I think it makes sense. So uh, let's go ahead, okay, and I'll try to gauge into the session further, okay.
Okay.
And I have some perspective. I have some skewed perspective, I would say, around the Web3 or blockchain. I'm more into finance. I'm currently working with the financial sector. So, would you like to give some your views? Okay, that what is Web3? Okay, and what kind of exposure it has till now? Okay, and where you see this blockchain and Web3 collaboration or capability going ahead?
Right. Right. So to start with, what is Web3? We just need to understand what this number three is coming from where. I
Right,
try to brief a little bit here, like I will not take too much time, because Web3, when say what is Web1, what is Web2? So we just need to understand briefly about what is Web1 and what is Web2. So Web1 is actually the era of starting of our internet era in 1990s. So where you have the static pages without any interactive applications, where you can just see the content on the websites and then try to understand like a newspaper or some kind of blogs on the website. So that was the beginning of our internet technologies without any interactive measures. And then almost for a decade, we were into this kind of static page environment. From there, we moved towards Web 2 in 2004 with the inventions of YouTube, Facebook, or similar kind of social media applications, where it has given users to kind of interact with other users also on the forums, or also kind of write their own stories or contents, which is uh, uh, totally changed from Web 1. Look, basically, uh, so people started interacting, people started creating their own content, people started uh, giving more of their exposure towards this Web 2. You can see now, especially last 3 4 years, with applications like Instagram Reels or TikTok or any other social media application. So people started kind of part of it is day to day activities into their social media acceptance. So Web 2 is basically more of the interactive way of dealing your website applications. So
right.
so the,
So.
Problem with this web 2, where it comes now, is like it is kind of controlled by very big organizations, few organizations, like Facebook, Google, or Microsoft, or Amazon. So basically everything is freely available for the users to either watch videos or watch the content or write something onto the websites, which gives which has given these companies, these major web 2 companies, lot of control over your data. Because whenever you are accessing something freely available on the website, so you yourself become an internal product for the company. So you become a data for the company, where they kind of put all your interactions, all your web behavior, all your kind of information into their own data centers controlled by them. So now almost for last 20 years, we have been giving our data or privacy without knowing, or sometimes by even knowing we wanted to access this kind of applications. We keep giving our data to this big major companies. So now almost all the data of billions of people is available with these four or five big tech companies, where they can kind of actually tell what you are going to do in next next few days. Or like they have so much of data, machine learning.
Yeah, right.
So even when you try to access Facebook or like any Twitter page, maybe it is different for you, or maybe it is different for me, in the sense the kind of ads are displaying based on your previous history or interest. So whatever Facebook page you see, kind of pop-ups you get it into on your page is totally different from my kind of Facebook pages. So it is almost driven by the data which you have provided to the these companies for over the decade or 2 decades time. So problem with this kind of environment is you don't have privacy. Your data is controlled by these major companies. They can do whatever they want to do with this data, because you are voluntarily giving this data, even though you know that you are giving your data. So
Right.
uh, these are the main issues with respect to web 2 companies. Though they are like a lot of innovation has happened, then we are entering into this web 3 world by eliminating all this controlled by these big tech companies, or maintaining your privacy, or giving this ownership of all this data control to the people itself. They can themselves decide what they want to do with their data, if at all they want to delete, or if they want to be anonymous in the internet. So they can decide. So countering all these whatever things are there in web 2, so there is a web 3 developed, and it is in evaluation stage. Like Web3 is basically a blockchain technology, where users has more power than the organizations. Users has more transparency, and users can actually build a lot of technology and applications over the Web3 blockchain technology. So yeah, it is tremendous with respect to the future growth. That's the reason, if you see, even Facebook is also very aggressively trying to become part of Web3 technology, and
Right.
change their name also from Facebook to Meta.
Meta. Mm.
So Meta is basically a inbuilt word for Web3. There is a lot of future with respect to Web3 technologies, and people are aware of this change, and then they are slowly moving towards this Web3. So that is really good to know.
Absolutely, it makes sense. So I have the idea about the Web3 is that in the Web1, people are, I think, being a user or a viewer of the whole ecosystem into the web. In the Web2, they become, like a viewer plus contributor. And as you said, the data has been controlled by the tech five or six giants.
Yeah,
And Web3 is giving an a power to the users that this is your data and you have a control over it, right?
right.
And I even got to know this and just understand this with the words that you're sharing. Okay. Later, I would further try to understand, okay, from your thoughts that this is now we'll try to dip into the technology, the financial technology, okay,
Right.
and you know the current financial system that we see as per the user, okay, or means the people who are using this ecosystem that is being available. So it have a very what we can say stabilized system or sort of grounded way available right now. And I think this is the area where people are trying to, be more comfortable and using this sort of system right now. Okay. And the major part of this current financial system is banks that we see, and even some BFSI sectors are there. Okay. And some industry that is growing in terms of fintech, mostly into the card sector. So these are the current financial system that we see and is look like, okay, and is managed right now, okay, with the three different variables that is available in the market. So now we are trying to see that the blockchain industry or the blockchain capability is growing, and the capability of it being decentralized is creating another buzz that is decentralized finance. Okay. So, try to give some perspective over it, okay, that how you see this market is, okay, till now, and what are the further approach or growth we can understand in the upcoming, next 2 or 3 years or beyond that. Yeah.
Right. Yeah, so yes, I think I just need to give some brief about the traditional finance, how this fintech whole technology is being kind of grown.
Mm,
So basically, if you see before fintech, it is traditional finance is not having any tech backing, like in the sense like it is all manual, like there was no automated system, or there was no interactive system. So in olden days, like either like 1970s or 1980s, where the computers are like nowhere in picture, even telephones were not there, or TVs were not there. People, everything used to happen manually, including the banking or including the trade, stock market.
absolutely right.
Everything should used to happen very basic way. If somebody says you to go through that kind of process now, it is
Mm,
impossible for anybody. So basically in 1990s, along with this web 1 or web 2 innovation, so
mm,
things uh, keeps changing with respect to the traditional finance industry as well. So stock market started executing their order books automatically through internet systems. Banking started processing their computers via mainframe systems. People started accessing their banking services through online system, through interactive online system. So we came to certain point where you don't need to visit bank anytime, like only for opening. Even sometimes you don't need to open bank also. Now during this 2010 and 20s, so there's a lot of technology innovation happen over this financial systems, where payment apps like PayPal or stockbroking apps like Robinhood bring a lot of innovation with respect to presenting the fintech technology for a user a point of view, like accessibility or interactivity, or like execution point of view. So the technology actually developed a lot with respect to fintech evolution, but inbuilt back-end financial system is still very slow. When I say very slow, for example, you want to send money overseas from India to somebody else, to remittance through banking system. it still takes lot of time. It still takes lot of money to transfer with respect to transfer charges. And also this banking system is purely based on settlement of ledgers manually. So the lot of manpower is required to settle this manual ledgers, because worldwide transaction is being taken care through this internet technology, but the backend ledgers still has to manually settle, which is time consuming. Sometimes it takes days also to settle some of the transactions. And also the stock settlements also are not instant, though it is happening front end. So what I mean to say, the technology wise, the representation, user interactions are developed at very faster stage, but at the same time the backend technologies are still very slow, not able to cope up with the technology that we are moving. And at the same time, if you see similar to web 2, where I start talking about the privacy uh, and other trust issues. So similar things are there in financial sector also with respect to the banking. So there is no transparency, there is no privacy, or there is no control over what you are going to do with your money. Sometimes suddenly bank can say your money is frozen because of so and so reason. You can't do anything. And also it everything is like managed by a central authority of different countries. Uh, so there are many restrictions with respect to user access point of view also. Now combining all these drawbacks, combining all these things, now we are in the early stage of, I can say, decentralized finance, where I think it can solve most of the problems which I stated, including efficiency, including openness, or including the fair way of doing the transactions. So decentralized finance is going to change a lot of things with respect to the traditional finance. So that is what I believe, and that is what I can see with respect to fintech evaluation.
Right. I think it make a lot of sense. Even at a front, you mean to say that at a front level, with the adoption of technology, as a user, we can leverage a lot of things. Banking systems are available right now on internet. So you mean to say that the at a user level, things are a bit more supportive with the help of internet, but at the backend level in the banks, things are also a bit slow. Okay. And even within country, we can do a lot of transactions, but when it comes to globalized transactions, the issue are still there, which you mean to say Web3 can solve, or the decentralized finance can solve, if I'm not wrong, right?
Yeah, so I will try
Absolutely.
to
Yep.
give more brief about how decentralized finance works, because I try to explain what kind of drawbacks we have in traditional finance and fintech world.
Yeah,
So
please.
basically, decentralized finance is actually backed by Web3 technologies, which in terms meaning it is backed by cryptography, it is backed by decentralized environment, it is backed by blockchain technologies. So these are the backbones of decentralized finance. So where all the financial related things can happen instantly, like payments, like lending and borrowing, like trading also. So these are the backbones of traditional finance, where the same things can really happen in efficient way. When I say efficient, the settlements can happen immediately, like what we had issues with respect to the traditional finance, with respect to international transfers, where sometimes it can take days, or the fees also very high, and you need a lot of permissions from different central bank authorities to clear this kind of transactions. The efficiency of decentralized finance comes with settlements instantly, and also it can operate globally without any geographical limitations. There is no human involvement is required in any way, because blockchain technologies run 24 by 7. Settlements happen automatically in every block, and it is always you can see. And also it is like very fair with respect to transparency. It is fair with respect to, because the whole blockchain technology runs on permissionless way, which means there is no intermediary is required to kind of take some decisions to complete this transaction. It automatically happens without anybody involvement. So, and also there is no censorship resistance. You don't need any ID to send this money to anybody else. So you just simply take wallet address of X person, and then take wallet address of Y person, and then you start interacting without revealing the identity of that person. You don't need to kind of provide your income statement to take any loans on decentralized finance, or you don't need to tell your geographical location to kind of access these decentralized applications, which is very very innovative way of having this fintech applications available in this manner. And also they are like very open, like you can actually, if you are little bit intelligent, and if you are little bit tech savvy, you can actually read the smart contract of all these decentralized applications by yourself and see what is happening. So there are such kind of openness is available, and also transparent, meaning you can actually see what is happening with your money online, like real time.
Right.
You can access whole blockchain transactions and see from where to where it is going. So the transparency is there. So there are many advantages with respect to decentralized finance. So it is fascinating to kind of keep building some kind of applications on this DeFi world.
All right. Yeah, I think it has given a lot of sense. Even, I still have a doubt though. Okay. Because, I have some Bitcoins or some, you can say Ethereum I own. Okay. So while making transactions, even there are some gas fee involved, right? So
Yeah,
I try to understand, okay, that if we are trying to make transactions through the rupees or money that we have in our account, okay, that transactions also have some charges which will go around, okay. So there are still some charges in the Bitcoin. So how different is that, and how small it is, okay? Because there are also some limitations, right? And even I have seen at a different time state, there are a different gas fee applied. So would
right.
you like to give some uh, context around it? That will be helpful, right?
Yeah, so definitely, see, whenever technology is at its evolution stage, there might be a lot of bottlenecks also. So one of the major bottleneck right now we have in terms of transaction fees, especially for the low amount transactions. When I say low amount, like somebody wants to send $100 or somebody wants to send even $1,000. So this I treated
Right, in the same segment, right?
low volume transactions.
Hmm.
Uh, Due to the kind of network it is being set up on both Bitcoin and Ethereum. Ethereum actually, just like yesterday, they moved from proof of work to proof of stake. So basically, the network is actually is being congested due to the lot of demand from the people who wanted to transact with respect to these blockchains, where it has created a lot of demand for gas fees because it is in control of miners, and then it is acceptable with respect to the smaller transactions. But if you see, when
Hmm.
it the big transactions, like sometimes somebody wants to send $1 billion from one country to another country, they can send like immediately, instantly. The kind of fees where for this kind of volumes are negligible, or like it is like very efficient. So now the question, like, how, with respect to the adaptability, with respect to the mainstream um, access for the more people, if these transaction fees for the low volume transactions are very high, how to survive? So for this, we have for Bitcoin, there is a Lightning network where another layer of network is being created to kind of make these things to happen. Even some of the pilot programs or some of the countries is actually adopting this lightning network. The transactions, like low volume transactions, can happen instantly at very very low transaction fees. Even for the ethereum also, now they started moving to proof of stake, and then you have l2 networks over ethereum, where the main focus is on,
Polygon, right?
yeah, Polygon or any L2 network basically, because Polygon is
Right.
actually a chain. So the main concentration for the L2 networks is to have very very low transaction fees and high speed. So like we are still in evaluation stage. When it is in mature stage, over the years you can see bitcoin payments on lightning network can happen instantly with very very low or minimal transaction fees, even for small transaction, like you go to mcd and buy a cheeseburger or anything at very very low value with a very very low transaction fee. The same thing can happen for Ethereum and L2 networks also. So that is where this mass adaptability will come into picture, and then people start using day-to-day activities as well. So right now it makes sense for the larger transactions, like I said, like more than a million or $1 billion. It is absolutely amazing to see you move this kind of funds instantly without any restrictions at very very low fees. Yeah, so this is where we are right now, and this is where we are going to go also in coming few years.
Right, and it makes a sense. So, also, I just want to try to understand your views. Okay, like even the apps that we see right now, like Binance or some other apps which are where we keep our cryptocurrencies, do they also charge some kind of fee? Okay, that is, I think, helping us to see that the small amount transactions have a higher fee, or they have a very small control over it. How do you say around it?
See, the exchanges have different uh, business model, so
Okay.
they don't take any revenue from your withdrawal or deposits. Their main revenue comes from the trading fees for trading, basically. But for the users, whoever is depositing into these exchanges to do this trading activities, and then later stage they want to withdraw, normally there won't be any fees for the deposit, because you will be kind of doing it from the blockchain, like open wallets like MetaMask or any other Web3 wallets, where there will be a gas fee for sending this
Mm.
assets to the Binance or any other centralized exchange wallets. And then same thing will happen from withdrawal time also. They kind of charge some fee based on the network congestion and network gas fees. If it is Ethereum, they will have anywhere between like $20-30. If it is a Polygon, or if it is Tron network, the fees will be like very very minimal, like around $1 or like less. So they still charge these gas fees based on the network which you are withdrawing into. So it is there for everything, like even decentralized wallets also. You still incur a lot of gas fees when you are sending from one wallet to another wallet. It is inbuilt in the system, so that is what exchanges also following it.
Okay, it make a lot of sense, right? Now I got a bit of perspective that once I convert my Polygon into Bitcoin or convert my Polygon into Ethereum, okay, Then with that transaction, I think you mean to say that these apps earn money. But when I transfer from my Bitcoin account to another person Bitcoin account, there is only the gas fee applicable, right? This is what you're trying to make sense around.
Yeah, they're trying to cover these gas fees through these withdrawal fees.
Right.
Yeah, right.
Okay, okay. Now I got a concept, and I think the more mature perspective around it. Thank you. Now I would like to get your understanding, or your thoughts on smart contract, because we are seeing a lot of buzz around it. Okay, and the fault, or the flaws we see is that uh, we need we or somebody have to review that these smart contracts, and we need to verify that whether it is being properly designed, or does it have some loopholes or not. So I'll try to get base and growing structure with this segment, that how you see smart contract is. Okay, how much valuable it is to the DeFi ecosystem, and what are the innovations that can stabilize these kind of improvements or innovations within this sector. Yeah, please.
Yeah, because smart contracts are the backbone of all the decentralized finance applications, whatever we are trying to build. So whatever the code you are writing into the smart contracts makes all the possibilities that is happening with respect to the front end. So like I said, the openness in the DeFi ecosystem is like very, very high. When I say this, kind of every project or uh, every application that is coming into DeFi ecosystem, anybody can kind of go through their code and then try to see what kind of code they are following, what kind of security measures they have, what kind of loopholes they have, what kind of vulnerabilities they have. All these things they can kind of view it, like it is visible for public all over worldwide, because they are like available on GitHub code. So there are like pros and cons with respect to this, because when you are building this kind of sophisticated open source code available to whole public, you need to be very careful when you are building. Sometimes a small mistake, even considering a decimal point, can make large impact when you launch this kind of applications. So you need to be like vigilant. You need to be very, very effective in your smart contract code writing. You also need to do some kind of third party audits where they kind of audit your smart contract code, and then kind of give some kind of sanity for the code which you have developed. Even then, sometimes it is not enough. Like you may have to do a backup audit as well by another company, where you can have second opinion about your smart contract. And then you can also crowdsource this smart contract auditing also through experts available in industry. So there is a possibility of hacking also. There is a possibility of taking advantage of these vulnerabilities. So we have seen many cases in recent years, especially when DeFi ecosystem well started growing tremendously. There are a lot of hacks happened. A lot of advantages been taken by people who can identify this kind of bugs into the smart contracts. So there is always pros and cons with respect to any technology development. So there is a white hacker, there is a black hacker. So always these things keep happening even in Web 2 world also. Sometimes people come forward and give back the money whatever they hacked, to just make sure that you learn lesson in harder way, and sometimes they don't give that money back because their intention is to
Right.
hack them. So like I said, like we are evolving. Everybody's learning lessons through the kind of hacks which are happening in the ecosystem. They are becoming more resilient day by day. I can say people started understanding more things about how to build a secure and effective smart contract. We really need a lot of people to understand this coding, especially with respect to building the smart contract. So always, my suggestion is always try to see what kind of hacks, what kind of vulnerabilities are happening in DeFi world or happened previously. Try to see why it has happened. Try to understand what kind of errors they have made during this developing of smart contracts and take lessons from there. So basically, like everything is available online, like everything is available for you in front of your system. So it is easy for you to understand all this and try to build more resilient, more effective, more secure smart contract code over the period. So that is what my opinion with respect to smart contracts.
Absolutely. With this basic understanding, I'll be getting a sense that when we are mostly into delivering projects to the bank, okay, and Big Four comes to take audits from external and internal, right? So, as per the understanding, I can see that with this DeFi ecosystem, there might be some big four kind of analytics or data science technology can evolve, okay, and they can help a lot in terms of making these smart contracts more suitable for the open ecosystem, and even do some suggestions that in what kind of tweaks and technique we should use to make our smart contract more valuable or hack free, we can say. Does it make sense, or am I in the wrong direction? I want to know.
Uh, See, I don't like kind of have this opinion like big tech, big four or whatever consultant or audit firms coming to from the traditional world come into this kind of environment because smart contract auditing, smart contract coding is totally different. Like it is,
Right. So I mean to
you
say that
compare, yeah.
they are for the web too. Okay. So there are companies which can evolve in this sector. Not them, but some of the companies who are working in this
Yeah,
sector
yeah.
dedicatedly. I mean to say, right.
There are some, yeah, there are some big auditing companies in Web3 world also where they kind of have some reputation with respect to their names. But at the same time, some of the biggest hacks, whatever is happened, is actually audited by these companies. Still, these hacks are happening because there are many
Oh.
limitations. Well, the reason why is sometimes whatever the code they have audited might have been changed to different version due to some additional functionalities they want to implement, or maybe the auditing company might have missed also with respect
Hmm.
to something which they can't foresee. That is the reason I was recommending to have a second opinion also on the audit from second company as well. So to overcome this, the big DeFi protocols are having this in-house bounty programs where users with a lot of expertise in coding can go and give these bounties, get these bounties. Sometimes these bounties go in the range of like hundreds of case of dollars as well, based on the severity of this vulnerability that they are identifying. So it is always recommended to have this bounty programs to crowdsource the security audits, and also keep focusing more on the audit point of view where voluntarily people will come and tell about the vulnerabilities openly. Um, so it is mix of both basically. When I say that is same thing is happening in web 2 also, where the big companies kind of do overall sanity, kind of do the overview of what is happening, audit point of view, and then they also keep announcing these bounty programs to encourage more and more small or limited users who has more expertise, though they are not representing any companies, can come forward and then report these bugs or vulnerabilities. So it is mix of both what I can see, which is happening right now in DeFi world.
Great, makes sense. So we can say that right now it's a growing field. Okay. A lot of big companies are there, but a lot of vulnerability is also there. Okay, and it might get improved with time to time as we see. And as you said, that the bounty program is there. Okay, so it is also giving an open chance to other contributors to come and play their role to secure these kinds of systems, which make a lot of sense.
Yeah.
Now I just move ahead, okay, and try to get your insight on what we can say fintech company level. Okay, so as we see, when we start to analyze the data or how the banking internal infrastructure work, so there are a lot of documentations goes around. Okay, in terms of like letter of credit, okay, invoice discounting, risk analysis, or even non-performing assets like NPA. So these are some key terms we see in the current fintech industry, right? That is always being a part of their internal ecosystem, and they'll try to use these terms to make their financial stability uh, throughout the current time. So I'll try to get your insight or your understanding that what kind of things you see, okay, that will be there uh, in terms of DeFi, that the decentralized finance.
Yeah. Yeah, so most of the fintech applications can be easily built on DeFi applications as well. For example, when you say letter of credit, basically letter of credit can be easily implemented with some kind of terms and conditions written into the smart contract, because all the smart contracts, all the DeFi applications in industry we call code is law. Basically, there is no signed documents. So you are not going to sign any documents like what in real traditional fintech world is happening. For example, you want to take a letter of credit, you need to go and sign this document to have this letter of credit. But in case of Web3 or decentralized finance, you just need to sign it through your wallet, decentralized wallet. Either it can be a Ledger or MetaMask or any decentralized wallet. So things are really a little bit different when it comes to decentralized finance, and at the same time you can always have this risk analysis or NPAs very transparent way in decentralized finance. Like recently you can see there is no NPA term in decentralized finance, because everything is operated through a code based on the collateral which you have given to DeFi lending platform. When I say this, for example, when I compare this with traditional finance, sometimes because of there is no transparency available, there is a official is involved in between with some kind of self-interest. They might give some kind of loans to some people, even though by knowing that they are not going to pay back these loans, which becomes a NPA theoretically. But this thing cannot happen in decentralized applications, because all the loans are given in decentralized finance are backed by asset, and the loan value which is being given to the person is over collateral, which meaning if you have $100 asset under your control which is being collateral, you can only get like $75 value of the loan. So there is a collateral factor plays role here for the people who wanted to take loan. If by chance this person is not able to pay back this loan, so code or the smart contract will automatically liquidate the asset whichever is put as a collateral when it goes to certain point of value in terms of dollars of that asset whichever he lended. So everything is automatically happening with respect to the DeFi application. So NPA is actually zero in terms of DeFi lending platforms. And also and also you can easily do the payments. You can usually do the trading also, because in traditional finance the trading settlements are happening very slowly, and also you need to go through a lot of process. You need to go through demat account opening, all other formalities. But in decentralized trading platforms like Uniswap, you don't need to have any user details. You don't need to have any kind of information about the users, so you can simply trade billions of dollars of assets under a decentralized protocol like Uniswap without revealing the actual identity of the person. So there a lot of innovation is happening, and at the same time, all the traditional finance fintech applications are being developed over decentralized finance with more transparent and more effective and more fair way.
Right, and I think I can get a lot of insights with what we have understand with this conversation. So you mean to say letter of credit or invoice discounting, all these are going to be a part of smart contracts? Okay, and
Yeah,
the risk analysis factor will be only to make this smart contract vulnerable free. Okay, and there are zero chances of NPA, so NPA can be eliminated, and that is a bigger section that our current banking system has, right?
right.
So yeah, I think it make a lot of sense to gain these kind of insights. And even your the angle of giving loans to someone who don't have the capability to pay back because of some influence that has been done, that also can be avoided, because it's all about the smart contract, that how capable it is and what assets you already have. Based on that, other things can be moving around, right?
Yeah, there is no middleman
So
involved in anywhere. So
right.
human factor is actually being avoided, the influence and then personal interest is being taken out, so that is what is actually causing a lot of damage in traditional finance.
Right. I think it's a big chunk of capability or space with this Web3 is growing, can give a lot of exclusivity, I would say, in terms of this whole decentralized ecosystem. Makes sense. Let's go ahead. Okay. And now I'll try to understand some bigger discussions that we see in the DeFi itself, and even I think within Indian government itself, there is a widely used term named CBDC, right?
Right.
So would you like to give some perspective that if it's going to be there, okay, maybe a 5 year down the line or 3 year down the line, so is the current DeFi system that is already being developed or evolving going to be applied there as well, or we have to create a separate capable DeFi ecosystem to support this CBDC area? Would you like to just
Yeah.
gain your perspective, right?
Yeah, see, CBDC is actually central bank digital currency,
Right,
uh,
right.
which has its own uh, self interest when they wanted to create this. With respect to the development point of view, I think most of the countries are really wanted to implement this CBDC. There are many countries are doing a pilot program on the CBDCs, including India. Recently, finance minister actually announced within a year we'll be having a digital.
Right.
And also there are other countries which are actually live also, countries like Bahamas or Ghana. So CBDC is the most talked term right now with respect to central bank authorities. They want to digitize the currency into a blockchain based digital currency. See, but I have totally different opinion on this in terms of technological development, because the main reason why central bank is doing is because the fear of stable coins growing with respect to their size. If you see right now, the stable coin, when I say the stable coins like USDT and USDC
Or
or
USDC, right?
USD, which are available on blockchain, which is actually physical representation of USD in terms of dollar pegging. So they started growing at rapid stage, and then central banks actually started fearing they may lose the control over the currency because people started freely transferring the money. Because earlier they were not really worried. Why? Because the Bitcoin or the Ethereum or any other cryptocurrency, due to their volatile nature,
Volatility, right?
it is not considered as a currency because sometimes what happens even with respect to user point of view also, you wanted to transfer $100 from somebody to somebody in terms of Bitcoin. By the time it reaches to him, the value of that Bitcoin might have changed because of the volatility of the asset which has. So people are actually hesitant about accepting this as a medium of transfer. But this actually solved when the stable coins came into picture, where it has stability, there is no volatility, and at the same time it has all the inbuilt functionality of blockchain, basically transparent, permissionless, and then anonymous. So people started using the stable coins very highly. The TVL also started growing at rapid stage. Then the fear of central banks started growing, so they started accelerating their pilot programs or their requirement with respect to the launch of CBDC. So in over, the intention for the central bank to launch this CBDC is to kind of counter the stablecoin growth, and also try to have their own currency on the blockchain. But but the blockchain whichever central bank is building is not permissionless, so it is run by the central bank authorities, whatever the nodes they are going to create. So it is not purely decentralized nature, so it will be a private blockchain which is being controlled by the central bank again. Their intention is actually good with respect to the currency point of view, with respect to the fiat ecosystem point of view. Why? Because they want to kind of eliminate the cash transactions and bring cashless economy into the central bank system. And at the same time, their main focus is to have this bilateral or multilateral currency transfer between the countries globally more effectively and faster way. So CBDC actually can solve this uh, problems which industry is being faced from quite some time with respect to the international transfers, uh, and countries developed countries like European countries or US countries are still having more cash transactions than digital payment systems. So they want to aggressively implement the CBDC for the retail users with respect to the digital payment, enabling and also making the economy into cashless economy. So the main focus for the CBDC is surrounding on this one, but it doesn't give any exposure, because exposure for building the applications over the CBDC, because they are considering this as a 0% interest fee bearing uh, uh, cash, digital cash available on the blockchain. When I say this, for example, you have your digital currency in your wallet issued by central bank, you will not get any interest out of this, because it is just for the transactions point of view, like payment for the some local requirements, payment for some utilities, payment for some groceries. So there is no interest component involved in the digital currency. So people like banks might be very little interested with respect to this digital currency with where it doesn't have any interest component in this. But definitely for the central bank, it will help you to kind of transfer money internationally little bit more efficient and faster way, and also it can help to kind of make less cash and more cashless transactions. So both pros and cons, like I explained.
Great. Yeah, Amarnath, do you like to take some break? Are you okay? We'll cut this part anyway.
Yeah, I have this cough actually.
Okay,
So
okay. So if
yeah,
you mind, because we have two questions around left, so if you want 2 minute break, that will do, and then we'll
let me have
continue if
water.
you don't. Yep.
Let me have some water and come back.
Please,
Uh,
please. Yep. That's a great thing. Yep.
okay, okay. And then
Okay. Yeah.
we'll just take last one or two questions and then conclude it.
Sure, sure, sure. Not an issue.
Okay.
I just try to, get some more inclusive insight with the understanding I get from your view on CBDC. Like you said that there are stable currencies, okay, like a USDC or USDT. So these are the part of the blockchain ecosystem, decentralized ecosystem. Even like our country is creating the CBDC that will be on private channel, or even if the US is creating something based on the dollars they have, okay, in a private vector. So I'm just trying to understand, okay, that how that will be different, okay, from the one that is available on the blockchain, okay, and what are the context we can set with these three different, with these two, CBDCs, that is one from Indian bank, one from Indian government, one from US government, and one that is available on the blockchain. Would you like to comment something, right?
Yeah. So basically, the stable coins, whichever is available on decentralized blockchain, are actually are telling it is backed by USD. So you just there is no guarantee, or
Hmm.
there is no kind of proof that they have backed by actual USD. For example, when you take one USDT uh,
Hmm.
of stable coin, so it
Hmm.
might not equivalent to actual one USD. So that is the controversy surrounding stable coins, but
Right.
that is being taken care by some of the more USD actual backed by currency like USDC or so. But the CBDC, whatever currency is US government, it is 100% backed by actual currency because it is bank
Hmm.
uh, authority. So they are giving this confidence, or they are giving this 100% surety that it is backed by $1 actually, whatever the one CBDC in terms of USD they are printing. So similarly, same with Indian digital Indian rupee as well. So when it is issued by centralized authority like RBI, we are sure 100% that it is backed by actual currency. So that is the only main difference between the stable coins which are available on decentralized blockchain and then CBDC issued currency by the central bank authority.
Right. Now we try to, understand a bit of insights depth around it. Even, I can see because I'll be making a lot of transactions, means in the USDT or USDC, and I have found out that the USDC seems to be more, stable than what is there on the USDT. So it's also almost conclude what you're trying to say. Uh, Now I'll try to, uh, gain your perspective on the case of El Salvador. So recently, we all know that they have adopted the Bitcoin as their, currency for their country. Okay,
Yeah.
and the time when they have adopted it, it have a, very capable valuation. But right now, we see a bit of it's around the overall market, Indian stock market or US stock market. but more on the cryptocurrency space, that the currency have fallen in a very rapid, you know, stage. So, how we can say capable it is, or is it also a good decision to adopt the decentralized currencies as a currency for the economy of a country, or you know, I just
Yeah.
try to gain and understand your perspective towards it, right?
Yeah, actually, the El Salvador case is actually a, I can say, they have very good intention in a wrong time,
Right,
basically.
absolutely.
So it is
Okay.
it is actually becoming, especially for the people who are into this industry, to have this kind of trust, especially from the government point of view, to have a Bitcoin as a reserve currency and accept this as a actual medium of transfer in the country officially. So this is the ultimate goal or aim of anybody from the ecosystem. Like they wanted to have this as a medium of currency in day-to-day activities, similar to whatever the currencies available issued by the central bank authority. Really appreciable, but the execution was actually very wrong due to the bull market peak time. They started accumulating the currencies. But what I can say. Uh, is this kind of things keep happening because market is still under very mature stage, is yet to reach, and also it is still evolving. uh,
Mm.
the volatility is always expected, especially with respect to the crypto assets. From the industry, if somebody has seen at least like minimum two cycles from 2016 to 2022, they know how the market actually works. I'm not like I'm not actually cycles we have, but this is what is going to change in future. Like maybe the volatility might come a little down over the period, at least like next 5 to 10 years. You might not see
Mm.
this kind of volatility what we have right now over the when stability come into picture, then there is more acceptable for the users to kind of treat this as a stable asset or store of value. Like for example, you see in traditional finance, gold is treated as a store of value, though
Right.
it has its own fluctuations, but it doesn't fluctuate so fast. Gold is still volatile asset, right? Like it keeps changing with its internal inherent value, but it doesn't change so fast like right now what crypto assets are having, especially
Mm.
Bitcoin. So we need to kind of be at that mature or at that volatility stage where people can treat this as a separate asset class with low volatility and can actually accept as a medium of transfer for the goods supported by the government. Then it will be a best case for the cryptocurrencies.
Right. So, do you think like a mass adoptability of even Bitcoin or whatever the best blockchain crypto coin is there can solve this kind of volatility, or you have some different perspective?
Yeah, for anything, when mass adaptability comes into picture, then the volatility will become low.
Right.
Right now, volatility is very high because it is still long way to go for the adoption point of view when it comes to
Mm.
global. So only few people are actually holding the assets and trading it online. So the kind of volatility is very high right now. But over the period, like I said, it can be reduced to a lot, at least not like this present situation. Maybe
Right. So stability might be there, you mean to
yeah,
say, in the
volatility
coming time.
not at this kind of scale, basically.
Absolutely makes sense. So I'll try to, as you have talked about the regulations, I'll try to go on with my last question with you. Okay. And this is in terms of, you know, understanding this digital and Web3 space, and what do you see that government should, means what kind of, you can say, options that, if available, okay, in terms of regulation, can help this market uh, that is already built or in the, immature to mature stage growing, can flourish, okay, in a good way with the help of regulations. What would you like to say on that?
Government clearly understand. In my opinion, government clearly understand they can't simply ban these currencies or this technology.
Absolutely right.
You see the kind of tone which we had last year from the finance minister is kind of blanket ban, or like there is no way that they want to allow anything with respect to the digital
Hmm.
assets happen in the country. From there they kind of tone down their pitch into more of taxation or GST or TDS kind of environment, meaning they wanted to kind of regulate it but they can't ban it, that they know very well. But at the same time, if you see from the blockchain industry point of view, the development point of view, uh, especially from Indian ecosystem, there are many bright-minded people who are actually gaining this knowledge and gaining this expertise with respect to building applications or creating a blockchain companies from globally, from India is actually very very high. uh, that is the reason, in my opinion, government should not put people in hostile condition, so that the uncertainty is very very high right now with respect to the Indian blockchain ecosystem for the people who are developing the projects. So that is the reason they are trying to move to less regulated or less headache countries like Dubai or Singapore or anywhere else. So we don't want to happen this kind of brain drain into other countries where innovation is actually happening in India. We kind of request to have some kind of regulations definitely, but don't make founders into a hostile situation where they don't have any option rather moving outside India, which brain drain can happen at very faster pace, and then we kind of miss whole technological innovation and development from Indian perspective.
Right, and I think, yeah, it make a lot of sense because I can see the Singapore and the even UAE economy is much more open towards innovations and what is happening into the Web3 space. So I think that's all, and it's been great conversation with you, Amarnath. Okay,
Yeah.
I would like you to tell anything at the end to the listeners that uh,
Yeah.
about your Nord Finance itself and why people should have it and what you're trying to do it with further, right? Onto you.
Yeah, so thank you. At Nord Finance, we're actually building traditional mutual fund investment kind of experience on digital assets environment. So basically, we are trying to build a asset management protocol for the users who doesn't have experience or expertise or time to kind of invest into digital assets. So we kind of take their funds in stable coins and then invest them into different investment strategies through our dedicated fund manager, where they can kind of grow the portfolio in terms of uh, their asset which they have supplied. So it is similar to what any hedge company or any mutual fund house doing in traditional finance. So we are building this application, and it is actually due for launch in coming months. The new revised or refined application. We are already live from last more than 1 year in decentralized way. So now we are trying to pivot a little bit more towards compliance or regulation proof way, which meaning we foresee that there will be a lot of regulations are going to come in each country, and we wanted to kind of do our self compliance with respect to the investment part, because the investment platforms are very sensitive with respect to compliance and regulation. So we wanted to be a self compliant, self regulated investment platform for the digital assets.
Absolutely. So I think that make a lot of sense, and we also want you to see you grow as a bigger part of Indian ecosystem with this decentralized capability that you are going through. So thank you very much, and have a good day.
Thank you, nice talking to you. Bye
Yeah.
bye.
Yeah. Bye.
Subscribe to the channel and don't forget to press the bell icon.